What is going on, guys? Welcome back to the channel. Hope you are doing well. And in a sea of fear, sometimes what you need is some certainties. You need to be able to understand what whales are doing. That's what we do with Nansen. And I'm going to take you through the latest balance of people like Arthur Hayes. And thanks to a big shout out to Nansen AI, our official partners in terms of the intelligence and on-chain analysis has made a massive difference. And in fact, when you look at Arthur Hayes' wallet, we've got this thing called deep research in Nansen. Okay, so what deep research is basically, it gives you the label for a particular address. If you want all this stuff, it's available in our Discord. But I just wanted to show you what we talk about here is absolutely on-chain and not BS. Yes, we can speculate, but right now we need to be able to understand what's going on. And of course, there is these certain labels within Nansen that make that information so much better. So the last time we checked Arthur Hayes, what we had is Arthur Hayes' wallet, and it just showed us exactly how Arthur Hayes was trading. Now, also what we have here is factual smart money trades on Hyperliquid, whether it's perpetual, whether it's spot. And this is what I've been taking advantage in terms of market analysis. Of course, again, we can see these balances in real life. This is really, really important. And a lot of this research goes to our VIP members. And of course, the market is not as black and white right now in terms of, yes, it's red, but we'll show you the nuances and new tokens that are being traded by smart wallets. Okay, so let's jump into the core thesis of my video. Now, the price of Bitcoin is sitting at 92,694. Okay, what's interesting over the last couple of days is how badly Bitcoin dominance has come off. So Bitcoin dominance has been falling. Ethereum dominance has been relatively steady. Ethereum price has been absolutely steady as a rock. Now, that tells me one thing. Emotion aside, and I will look at the fear and greed index as well. What that tells me is quietly, while this is happening to Bitcoin, the alt market, or especially Ethereum, is relatively strong in terms of the index and has consistently stayed above $3,000. We can actually see here, currently trading 3,100. Bitcoin is at 92,659. BNB under $1,000. XRP did have a move. I mean, everything did have a significant, slight move yesterday. 3%, in the top 100 is going to be very common if you look across the entire board. What does that mean? That means we just got one day of green amongst a month, a week of significant red. And that leads me to looking at the next bit of data for you that I need to analyze. And this is the this is the market fear and greed index, which is a pretty good reflection of where we are. And why do I not capitulate right now? Why don't I just sell everything? Well, we had this massive period of red back in April, starting in pretty much after the election. Okay. And you can see here, we went into this bit here in October. We had this massive liquidation candle. That is represented by by that bit there. And then we are having these fear and greed indexes similar to what we had towards the end of this dip. And nobody can argue about it. It is absolutely factual. Once the fear and greed index dips below 25 and really below 20, market equals to extreme fear. Now, what I tend to do in a situation like this is you can't sell, right? In fear. You're supposed to sell in here, over here, over here. Look at these periods, right? Very, very simple, accurate way of actually selling. So extreme greed is when greed is above 50, 50 is neutral, below 25 is, below 30 is really fear. Below 25 or below 50, you started to get market in neutral territory, in fear, and then in extreme fear. Okay, so I don't really see the point of selling right now. Let's get that very, very clear. Why? Because selling it here as opposed to selling it here is a massive difference. Okay, so number one, sell it here, it's a no. Number two, what we need to do is, when it comes to what you need to do, if we get a dead count bounce, so if we get a bounce back to the 50 EMA, okay, and you feel like there's going to be a rejection, yes, you can sell some shit coins, right? Your core never changes over time. So I really want you to understand that. Let me make this very clear again. All right, let's make this very neat. What we are seeing, guys, is this period of February to May is playing out. Now, if you haven't got the balls to do another February to May, February to May or October to January or whenever the market reverses, if you don't have 3 months for bullshit, right, you are in the wrong market. Perhaps what I would say is, as the sentiment comes back up and we try to test the old moving average, then you need to sell, right? Because the chances are that level gets tested and it may get rejected. If it gets rejected, yes, you have actually taken a little bit of profit there. And I'm not talking about core holdings, but what you cannot do is start talking about capitulating at these lows. Now, if this is a bear market, then these fundamentals that I'm about to talk about should not exist. One, the Bitcoin dominance is looking rather shaky. Again, this is something that I've shared with the group. Again, you can see here it's, pretty much flattened out in terms of the RSI on the daily. But this is the kind of stuff that we share, including some of the smart money. But what's even more intriguing is nobody in crypto is talking about this, right? This is, I'm going to refresh it so you can see the swings. Yesterday, right? This is how close things are, guys. We are at a toss-up, right? Between rates remaining the same and rates being cut. So if we remain the same, we will have, so far, these are the projections, 49% and 51% are saying the market will, the Fed will keep the same. So if we, let me rephrase that. If the Fed cuts, so far, the odds of the cut are below or they're equal about to the Fed holding rates. So let me just make it obviously clear. The current odds are Fed to hold is 51%, meaning that the market is pricing in the Fed holding rates, and the Fed to cut by 25 is currently at this level, which is 49% or thereabouts. Yesterday, it was kind of swinging this way. So this was in favor of a cut. Today, the opposite is happening, and the rates being flat is the big thing. But you could actually see it's right now, it's just 50-50, man. It's 50-50 odds of who wins. Therefore, this is a huge uncertainty, right? And if there's uncertainty in the market, there is always going to be lack of price movement, and the market is going to remain bearish. Today, we have a massive opportunity to correct that. Why? Because today we see the Fed minutes. Now, I want to talk about something that we've discussed in the Discord, and I've put this up. I do believe I need to share this with the wider community, but this is very, very important. This is not the kind of information YouTube is talking about. No way. So I'm going to try and take you through some of this and see if you could maybe grab some useful information here. Now, the first thing I'm telling you is it's very difficult to look at the macro, but it's also important to look at the macro from a 12-month perspective. So what I've done here is I've put my neck on the line for 12 months, and in particular, global macro projection, right? And of course, liquidity wave, which is very key for these markets. Now, when we talked about the real estate cycle and everything, I was talking to a very good friend of mine yesterday, and he said to me, listen, could this be, crypto's turn to actually go on a 10-year bull run? While some of you might be laughing at that, and I'm not really calling for that right now, I see some of his logics. And when you look at the 18-year cycle, real estate potentially ended in 2027. That always happens. And what we have is this massive Chinese liquidity. Why does this matter to us? So we have some historical precedents, okay, of things that happened that obviously took place before. This is a ripple effect, a global phenomenon of liquidity expansion, and it happens in sequence. So, for example, right now, the UK, Japan, China, the Eurozone, okay, are all particularly slightly depressed. The next 12 months, the biggest forces shaping global market will be the Chinese liquidity cycle. Why? Because of manufacturing, the way China is dependent on that manufacturing, and particularly from raw materials, right? Raw materials make up a lot of the Chinese kind of imports. And what we've already seen is when they start to put these stimulus packages and announce them, you see hardcore commodities like copper, oil, steel, metals, all up by 5%, okay? Now, as these obviously go up, then what tends to happen, this isn't random, and this is global liquidity at play. Because then other economies look at this because things are being produced, okay? So the Chinese market right now and watching China is quite relevant to what can happen to these major economies, because all other major economies will inject liquidity. And asset prices rarely move in isolation, okay? So what you're really seeing right now is asset prices being suppressed because there is no liquidity. Historically, liquidity in one part of the world, and this is very, very key. I want you to pay attention to this. Liquidity in one part of the world spills across borders, commodities, and even risk assets. How do we know this? We know this because there are real life examples. Example number one, okay? Example number one, back in the, 2012, right? 2012, we had liquidity expansion. The EU was facing crazy debt crisis, and the European Central Bank stepped in aggressively, and these were the results. The US, right? All the way to the US market rallied by 13%. And then we have other examples. This is 2013, Japan's fiscal and monetary expansion. Japan rolled out a massive fiscal monetary expansion. And guess what happened with the loose monetary policy? The results were the S&P 500 actually skyrocketed by 500%. So what you're seeing, although you're seeing drawdowns now, the situation is slightly different to 2022. 2022, the Fed was actively, reducing its, hiking rates, basically, right? So liquidity in one zone, in one major economic zone, actually is a massive impact. Now, of course, I do say here, unless if there's a black swan or anything else that happens between that expansion. Okay, so the next 12 months, we will likely see, and again, I do call for some kind of a pullback, recession, collapse, whatever you call it, at the end of 2026. So this is genuinely potentially a 5-year cycle. Potentially, I say, because nobody has a crystal ball. But based on historical cycles, right, macro conditions, political timing, we know that the US has been quite turbulent with tariffs and things like that. Here's my genuine projection. Number one, Chinese stimulus rollout. I think the economy is struggling with at the moment, because we need to also identify what their problems are. So currently they have a weak property sector, slowing consumption. The Chinese population is also aging. failing or falling exports, and they have a deflationary pressure. And this is why it's important to understand the macro, guys. Okay. Now, the countries do one thing when this happens, and China has been doing, like, for example, the Chinese managed supply, or M2, is double that of the US. Okay. What do they do? So the countries will stimulate the economy. We are seeing this in the US. I'm really interested to see what the Fed does today. More liquidity, more credit, and more credit, obviously, more printing,